isn't it? There we go. Good evening, everyone, and welcome to our very first Zoom webinar, also being live cast on Facebook. Super excited for this. I have to say, my husband last night was really annoyed with me because I couldn't sleep last night. I was so excited about our webinar tonight. I've been on podcasts that both of you gentlemen have hosted, had a fantastic time. So I thought, who better to bring than a couple of the wisest guys in real estate, bring them together in in an online forum and just do a live chat with you guys. I've got some definite questions that I know people have been hoping that we're going to cover, and we're just looking forward to chatting with you guys. So thank you so much for giving us your Monday evening. Much appreciated.
Well, thanks for having us.
My pleasure.
You're too kind with your comments there, but yeah, thank you.
I was going to say best looking, maybe not wisest, but best looking.
Well, it's better than calling you wise guys, which is what I realized I did on Facebook initially. I'm like, I didn't mean you were wise guys, and then you were smart, but that's okay. We'll just leave it at that. So just a couple of housekeeping items for everyone. So the first thing is, if you look at your chat box, which I can see you guys, I'm so happy you guys are chatting and interactive. That's amazing. Just a reminder, there's a drop down at the bottom where next to the little box where it says 2. Make sure you click the drop down and make it say all panelists and attendees, because otherwise you're not chatting with the group, you're just chatting with the 3 of us, which is fine. If you have a question for us, that's no problem. But if you would like everybody to be able to benefit and participate in the chat, then please don't forget to click that drop down and then you can participate with everyone. So tonight's webinar is a little more informal than some of the ones that I normally do. Normally people have slides and all kinds of fun stuff to share. Hey, George. And but what we're going to do this evening is we're going to do a little more of a Q&A. So be a little bit off the cuff. Some of the questions the guys know in advance. And then I have a couple of ones that I didn't share in order to give you guys a little bit of a hard time. So first thing I'm going to do is I'm just going to share briefly and do an introduction just so that everybody knows who's here and what's going on this evening. So of course, I am Elizabeth Kelly. Welcome to our webinar, Building the Ideal Portfolio with Mark Loeffler and Andrew Hines. And this evening we have, as I mentioned, a series of questions. I consider myself very fortunate to be here this evening and be able to chat with everyone and learn from these guys who have a ton of experience in real estate. My journey has been a little bit different, and I've gone quite a different way from Mark and Andrew in the way that they've built and directed their portfolios. So I thought it would be great to bring everyone together and have a chat. When Mark and I were talking about a month ago, he said, I want to talk to people. He's like, I want to tell people I'm selling my buildings and I want to talk about why. So I thought it would be a lot of fun for us to do a webinar on, what makes you decide to buy a property and what tells you that it's time to sell. And we'll get Andrew and Mark to share a little bit about their background in a minute. But I specifically want to know, I'll check back in with Andrew, but I want to know if you sold any properties yet, Andrew, or if you're just hanging on to all of them and you have plans for that in the future.
You want me to answer now? I did sell one. I got one more I just listed.
Okay, interesting. All right, that's awesome. So we'll definitely circle back to that, and I'd like to get a sense of, what caused you or what made you decide to do that. So of course we have Mr. Andrew Hines, who hosts the Andrew Hines Real Estate Investing Podcast. He's a fan of the Burr Strategy and has a whole bunch of other businesses. Like most people in real estate, multiple companies, multiple investment strategies, really gives us the ability to be able to diversify and to be able to ride out. We know it's a bit of a crazy market right now. It's not always going to be this way. It hasn't always been this way in the past. And the question really becomes, how do you decide what to do with, the time, the knowledge, and the market that you have in front of you right now? So thank you, Andrew, very much for joining us, and we're happy to have you here. And then we are joined, of course, by Mark Loeffler, who has been around in real estate for ever and ever. Your rent-to-own book was one of the very first ones that I ever read, Mark, when I was starting my real estate journey, because rent-to-owns were something that really resonated for me. And it's been amazing to see you evolve as an investor, starting from rent-to-owns and being a member of one of the treasured guest speakers of RAIN, and then seeing you kind of go out on your own and go in a different direction and really heading more into the commercial market, which I think is amazing. And that can be a really tough nut to crack, to get into that commercial commercial market. So I'm looking forward to chatting with you a little bit more about that. And of course, you have your very own YouTube channel, which you have been working very hard on, and happy anniversary on that. Your anniversary, I think, was the 19th of February from the date of creation. So we're happy that that's turned out well, and we can tune in several times a week and get some more information. So I have what, 5, 6 questions for this evening. So I'll read them out briefly, and then that's so that everybody who is here in the webinar knows what to expect in the future. And then I'm going to turn off the questions and flip back, and we'll have a discussion with the 3 of us. So the first question I'll have for you is, does your current portfolio match the vision you had when you started investing? And we'll chat about that in a second, because I don't know about you, but mine looks nothing like I planned. And what factors need to be present for you to buy a property? What are the key indicators that it's time to sell? What should new investors focus on when looking for opportunities in the current market? And then I want you to share with everyone your out of the park home run property, and maybe a story about the property that got away. And then we'll talk about what your plan is for the next 5 to 10 years. Sound good? That should keep us occupied for at least, 20 minutes or so anyways.
Sounds good.
Awesome. So Mark, what would you like to add? What do you wish everybody knew about you that we didn't cover in sort of your intro?
What didn't you cover? Geez, I don't know. Yeah, I was a rugby player way back when. I love to travel, drink wine, smoke cigars, play golf. Yeah, drive fast cars around little oval things fast.
Little bit of an adrenaline junkie then. That explains your attraction to real estate.
I guess real estate's boring. What do you mean?
Oh, I don't know. There's something pretty exciting about putting in offers and waiting to see if you're going to get it.
Sometimes it just becomes old hat. So
that's true. When you're a realtor, you don't you do it a lot. So absolutely. Yeah. What about you, Andrew? Thank you so much for moderating the group there. So if people have questions, if you don't mind, jump into the Q&A, and that way we can keep track of the specific topic related questions versus the ongoing chat from the members of the webinar. So thank you so much for helping out there, Andrew. Fast cars.
Yeah, we have some questions accumulating here. There's a few that are specifically for you, Mark. So I don't know if you have that tab open, but we can get to that. I know we're gonna do.
Oh, yeah. I mean, I can open
questions.
it. I'm in the chat. I'm talking to people.
It's not in the chat. It's a separate tab though.
I know that. Yes.
Yeah, all right.
Wow.
I thought we were going through those other questions first.
Yeah, we are. We are. Okay, let's just do one thing at a time here.
Keep it slow.
Yeah.
All right. So Andrew, what do you wish everybody knew about you that you haven't shared or put out there as much as perhaps you normally would?
That's a good question. You know what? I'm actually kind of a private guy, although I am, out there with the stuff on the podcast. It's not actually typically my nature to go celebrate things and talk about myself like that. So, you know what? I don't have anything specific that I'm looking to broadcast at the moment. But I think those who know me, they know my sense of humor, and I like to have fun with this. I like, jumping on Mark's show, and we just get to, randomly say things and give our opinions on stuff, whether we're right or wrong. We love thinking critically, and I think that's a big thing actually that I could add in here is, I love to think about complex ideas, and especially with the economy, where things are going, what's happening, and just with my background, having gone through school and studied economics, I just kind of fell in love with the topic matter. And I feel like that's so applicable to what's happening and, us real estate investors now and what we're going to do next. So we'll get into that more, I'm sure, but just a couple thoughts that come to mind.
Yeah, absolutely. And I find it so interesting too, because a lot of times when you guys host as podcasters and YouTubers, you don't always get time to talk about, like, you're talking generally about things I would imagine that people are asking you questions about, but you don't get much time to talk about what really is important to you necessarily, right?
I'd interject a fair bit, as most know me. I'm not one to hold back my opinions, but no, I do agree. I don't get that expanded format very often. I don't often take the opportunity to do that. Mark does so more though with the YouTube channel.
Yeah. Well, I mean, obviously I can put out shorter content. I can just go ramble on for 10 minutes about something and go from there, right? Whatever I think everybody wants to hear. And sometimes it works out really great, like today's video. I don't even know, we're an hour and a half in. Let's see, we'll do a live, see how we're doing on this one. Hour and a half in, we got 250 views, 42 likes. So everybody, after this, you got to go watch the mortgage deferral cliff, and you got to smash the like button. I need 1,000 likes on that one. So.
Okay. All right. That sounds like a good vision. We'll help you achieve that. Speaking of what happens at the end, I'm trying something new for the first time. In addition to doing the live stream tonight, I actually have a giveaway at the end of the webinar for everybody who is still here. So I have to get you guys to give me a number at the end of the webinar. Not right now, but we'll have a gift for someone who is still here at the end.
I'll throw in a book too.
Oh, that would be fantastic. That would be, oh, I better write that down so I don't forget. That would be amazing. Thank you, Mark.
It's funny, Mark's book was actually the first real estate book I ever read.
The
rent to own one. Yeah. Made it seem so easy, Mark. You got me into investing.
Absolutely. So that ties in really well with our first question, I think. So Mark, why don't you start? Does your current portfolio match the vision that you had when you started investing? Does this look like what you thought it would look like?
Yes and no. Like I probably, when I started my first couple of years, I thought like 100, 200 doors was this extreme number that, you know, would be impossible to get to. And then lo and behold, you know, just takes time and effort and you get there, right? And I was always into, before I got into rent to own, I was into basically burring properties. Before I was burring properties, I was doing duplexes in Newmarket and in Toronto, and I moved to Hamilton with my investment in Cornwall, Ontario. But and then the rent to own thing was just a bit of an interlude there because I kind of didn't want to work for anybody else, and it allowed me to go be a full-time real estate investor. And yeah, so in that time, I was still buying, you know, duplexes, triplexes, fourplexes.
Wow. So what led you away from rent to owns?
Well, rent to owns are a heck of a lot of work. I mean, I wanted to get out of my job and I replaced it with that job. And then once I could then replace that money with something else, it just became better. I don't like selling things necessarily. So when I'm forced to sell something in a rent to own, it's just basically a long flip.
Gotcha.
So I wanted to hold more properties, and you know, you do all that work up front, and then 2 years later, you got to sell it for a predetermined price. I'd rather, you know, sell it at the price I want to sell it at.
Yeah, definitely. It's rent to owns can be a little bit more restrictive, especially, you know, if you're in a market like this where it's absolutely taken off, then, you know, the tenant buyers, perhaps we should back up. Do you want to explain just briefly what a rent to own is, just in case people aren't familiar with that strategy?
Sure. Rent to own is simply we used to do a tenant first rent to own. So we'd find somebody who wanted to buy a property but couldn't qualify for a mortgage. So basically they would rent from us with an option to purchase. And a portion of, they would pay above market rent, and a portion of that rent would go back to help them build their down payment. Plus they would give a down payment up front. And over that 2, 3, 4 year period, we would help them improve their credit so they could get a mortgage to be able to buy a house from us, which we had predetermined the value typically when we were setting up the contract.
Absolutely. Absolutely. So really, it sounds like your journey has been a little bit of kind of stepping stones. You know, it's easing into utilizing different strategies to satisfy different needs at different points. So,
oh yeah, I mean, I've flipped properties, I did rent to owns, I've done buy and hold, I've done like duplexes, 3s, 4s, 6, 8 units, 20 units, 30 units. I own a little bit of commercial. I'm actually looking at like office space now. You know, people are being greedy around residential apartments. So, you know, where are they fearful? They're fearful in the office apartment build.
Yeah.
I'm hoping. So I'm seeing if I can get some deals there.
Good for you. That's awesome. And how about you, Andrew? I know I appreciate you very much because you're in there sort of moderating the chat box. So just a reminder, guys, for questions that are pertaining to real estate as opposed to the ongoing conversation, at the bottom of the webinar panel, just the black bar at the bottom, there is a Q&A box. If you have specific questions that you would like the speakers to answer, please put them in there so we don't lose them in the context of the overall chatting, which is fantastic. I have no issues with that. So Adam, for example.
Yeah, you guys can answer each other's questions. You don't need us to answer them, right? Like, so if you want, but if you want the panelists to answer them, put it in the question box.
Put it in the Q&A box. Awesome, perfect. So Andrew, talk to us a little bit about your current portfolio and whether it matches the vision that you had set out when you started investing.
You know, I think that's a very difficult question for me to answer because I don't really think I had much of a vision when I got started. I just wanted cash flow. So to me, it was just like whatever would cash flow. And the idea of rent to own seemed very good because there was a big cash flow number attached. But similar to Mark, it wasn't just that I didn't want to sell it at a set price. It's that I didn't want to sell it at all. For me, the worst part of an investment is selling. Now, of course, there's this slow progress thing. You know, I didn't know how to burr. I didn't know how to do any of that early on. So my complete lack of a proper vision for where I was going and how I was going to get there was a pretty big mistake that I made early on. And as I went forward, I started to realize I needed to be a little bit more clear on how I was going to get to, you know, a substantial amount of cash flow and net worth. And then I figured out the Burr model. I figured out that I had to learn what I didn't know, which I was originally resisting. I didn't know how to renovate. I didn't know how to, you know, talk to an appraiser or do any of that stuff. And, you know, by hanging around smart people, eventually it rubbed off and I just started doing this stuff. And I started getting the vision, but I don't think I had much of a vision early on. And I think that was definitely a weakness on my part. Now, you wanted to know what it looks like now. It's mainly student rentals, which given what's happened with the lockdown, that's why I sold one. I'm going to sell one more. I'm going to put some money to work elsewhere. I want to get out of the London market a little bit, not because I don't love London, but I just like to diversify. I'm a fan of diversifying against political climate. So the Ontario Canada situation, I think that there's a little bit to be desired in the way things have been handled. So I am looking at Florida right now. I do see some opportunities right now, and I see a really good opportunity to buy real estate somehow at a much more affordable, you know, purchase price when you compare it to prices in Ontario. And I'd have an opportunity where I'd be able to you know, kind of serve a couple of different classes of people. So I'm not going to get too deep into that just yet. I don't want to go down a tangent here.
No, that's amazing. Can you go a little bit more into, you mentioned diversify against political climate. What does that actually look like when you're applying?
Well, you can diversify against so many things, right? You diversify against one industry closing. You can diversify against schools being locked down. So diversifying against the political climate is diversifying when, you know, Doug Ford's in control of Ontario, Justin Trudeau's in charge of Canada, and think what you will of them. I mean, I personally wouldn't trust those guys with a potato gun. So for that reason, not to get political, but for that reason, to have everything under their jurisdiction is a risk, right? It's a different kind of risk, one that we investors don't often think about, but you have to think in terms of regulation. Which way are we headed? Are landlord laws going to get less favorable for landlords and more favorable for tenants? Which way do we think that's going to go? So by diversifying into other provinces and into other countries, we can potentially hedge ourselves. If there is a change to happen in one market, we're not going to feel the full impact of that. Now, if I were to say everything I owned was in student rentals and schools get shut down, that leaves me extremely vulnerable. So the idea is just to prevent that type of a situation from happening. And yeah, so that's not like that's my be all end all strategy there, but it's never bad to diversify as long as you're diversifying into things that you truly believe in. Don't diversify just for the sake of diversifying.
So what does a diverse portfolio look like for you? Because we talk as investors, we talk a lot about diversification, but people seem to have different understandings or apply different meanings to that. What is your idea of a diverse portfolio?
Well, I don't think there's one right answer, but I mean, I would have said before that I would be really well hedged to have student rentals that would also serve middle-class families and kind of satisfy both of those needs so that I could pivot. So I think diversification can come in a form of being able to pivot. So you have your intended use, and then you have the ability to pivot and do, you know, kind of plan B, pivot again and do plan C. So that's a form of diversification in my mind. Like I said, there isn't one right answer, but I thought in my head, like economy's up, economy's down, students are always a sure bet. People always go to school. It was, in my mind, my portfolio was probably one of the most secure in existence because I'm in a market that's economically diverse. It's got healthcare, corporate head offices, manufacturing, all kinds of things in London, Ontario. And I'm servicing students right next to one of our country's biggest universities that has a massive draw from the Toronto base. I mean, to me, that's like gold, like pure gold market.
Yeah.
And I was striving to just get close to that school, just buy as many properties as I could, close to that school, quality locations, even a little bit fringe locations, knowing that the draw is there and the base of students is there. And then this all happens, right? So things that we thought of that were absolutely certain aren't as certain as they once were. So it's, to me, the definition of diversified has really changed. I've recognized a bit of a vulnerability. Not that, I mean, it's not like the sky is falling. I still want to keep some. I just want to take the responsible action and move a little bit away as well.
Absolutely. Absolutely. What about you, Mark? What does diversity look like in your portfolio for you?
Well, I mean, one day I woke up and I was basically 99.9% in real estate. I had, you know, obviously my real estate investments, I'm a real estate agent, so I had real estate income. I also was doing private mortgages. So literally all my 99.9% of my wealth or income was derived from real estate. And for me, that became, I was like, well, I got to diversify. Like I got to, number one, find somewhere to get cash flow that's not me working. Number two, if the real estate market in Ontario were to go to crap, I was screwed. So, you know, so either other locations, other businesses, other, you know, streams of income. That's so I am less in real estate now than I was. And my goal is to be 50-50 real estate and outside of real estate 50. And I'm every year I'm getting closer to that. Even though my real estate holdings grow every year, my outside of real estate grows every year. It's just growing quicker.
So what is your money in outside of real estate? Are you talking stocks or?
Well, I do options trading, of course. I own 3 restaurants in the Hamilton area, parts of. You should all go if you're going to Hamilton, Carl Restaurant on James or Ottawa, Victoria's Steak and Seafood. And for people like Andrew, they have great vegan food and gluten-free too. So I mean, I invested in a company called True Local. It was an organic meat delivery company, local meat delivery company. They got bought by a company called Emerge Commerce. You know, I've invested in a couple small businesses, a mortgage brokerage, a gym, those types of things. And it's just structure them a little bit differently than you would another type of thing, but you know, and some other type of just private placement stuff. And then obviously I do options trading, which gives me a decent return.
Awesome. It's so interesting because I'm hearing so many real estate investors talk about getting into options trading now. Are you into trading as well, Andrew? As an economics guy, you would think like you're one of the guys in real estate who has the real economics background, who understands the fundamentals. And I always think it's so interesting to get your opinion on different things because you actually literally understand the fundamentals.
I haven't done it yet. I'm still paper trading on that app and learning how to do it. I've got Erwin's course that I'm going through very slowly. I mean, for me, I hear all these people doing this, and it's just been a challenge because I've been so busy because I still don't have an admin assistant on. So I think once I tackle that problem and fully take care of that, it'll get a lot easier to add in these other things, which would be very profitable. And it's silly that I'm not yet doing it because actually, like you said, everybody I know in this space is pretty much doing it and profitable at it, which is just ridiculous.
Yeah. And I have to say, you know, I hired my VA, I guess a few months into the pandemic last year, and the quality of life that I have now from sharing some of my responsibilities with people who will not only do it well, but do it better than I would, who have, you know, the bandwidth and the time and the attention to do some of those, you know, detailed and administrative tasks. It's been absolutely incredible how much the quality of my work output and my productivity has increased. So I think Andrew, it's time.
Where's your admin out of? Like
she's just in Scarborough.
She's in Scarborough. Okay, so you didn't want to go international VA. You just wanted to go local, like somebody who can work from home.
Yeah, it's actually it's funny. She went to my mom's church, and my mom just said, you know, she's lost her job due to COVID. I know you've got some projects going on. Do you need a hand? And she just ended up having this amazing skill set. She's fluently bilingual. She worked in marketing, and she's incredibly smart. So she picks things up very, very quickly. So she's doing all kinds of things that I don't even know how to do anymore. Like she's managing stuff for me, and I don't know how to, you know, enter people in my database or whatever. Like that's her department. So being able to share that and not feel like that's on my shoulders has been a real gift.
We're going to have to talk more about this.
Absolutely. Absolutely.
Yeah.
Thanks, Paul. All right. So we've got some questions here. So we may not end up getting to cover the ones that were planned in advance, but I think we've got to cover some of these.
We should do some of these.
Perfect. Okay. So we have Nav. We'll start at the beginning. Is that the beginning? Yes. So Nav said, I would like to know how to go from single family to multifamily and commercial. I have 4 single family and think it's time. How do we traverse that shift? Do we go hunt on MLS? Do we talk to brokers? Tell us, Mark.
Yes. Well, I mean, everybody's situation's different, obviously, right? I bought a lot of properties off MLS. I bought a lot of properties off of MLS as well. Obviously, you're, you know, taking 4 greenhouses and trying to turn it into a red hotel. So now you got to come in, and there's a couple of different things. Are you joint venturing the new project? Are you selling the 4 houses to be able to buy the new one? You know, it really, like, it's not a one size fits all answer. You know, obviously, like Kellen James has been on my show a bunch, and he basically sold a duplex that he had a lot of equity in, and he took that equity and he bought an 8-unit property. So, you know, you can obviously do that. I mean, it's just, and finding the deals, it's like anything, right? The more stones you turn over, the more deals you're going to find.
Absolutely. And I know Andrew wants to weigh in on this one as well. So maybe I'll let Andrew weigh in, and then I'd like to add a couple of thoughts to that as well. Do you want to jump in, Andrew?
Sorry, I was just trying to get the thing to capture Mark's answer for the question by hitting answer live, because I didn't think he did. But yeah,
am I supposed to do that?
I think it will record it. Okay, so sorry for everyone for the technical difficulties here, but I think it will record your answer and like timestamp it, but I could be totally wrong, so you can ignore me if that's the case. Okay, anyways, I would just say, Mark, like, one relevant part of that would just be, where are people going to find the properties? Yes, you're talking about, you know, you talk about turning a lot of stones, but I mean, are you the guy that's got a couple up your sleeve, or they just got to bust their butts and get out there?
I mean, I always have a couple up my sleeve, but like, talk to commercial brokers. You know, there are. I was a member of Hamilton District Apartment Owners Association for a long time. You know, so I'd go there, and there was apartment buildings owners there. You talk to them. There are a lot of old guys that at some point are going to sell. So you just become friends with them and just say, hey, if you're ever going to sell, let me have a crack at it first. Appreciate it, right? You know, and then you get to meet other commercial brokers. And listen, if you're going to go, and a lot of these properties turn off market, yet they're still represented by realtors. And realtors will come to you first if they know you to be a person who gets deals done. And, you know, once you say yes, and here's my price, the deal is done. No problems, no issues, you know, signed on the dotted line, deal goes through, no fuss, no muss. Because what they don't want to do is put it on MLS, get 40 people in, and then have 5 deals fall through. Because that just wastes everyone's time.
Yeah. And I think the wholesalers feel the same way too. You know, I've chatted a couple of times with Luke Boyron and Aaron Moore and some of those guys. And that's literally, you know, one of their biggest challenges is people saying, yeah, I want the deal, I'll take the deal. And then it comes down to closing and they're on the hook and the deal isn't able to close. So I think that's one of the key things that you want to do as an investor is line up your financing first. Know what you can buy so that when the opportunity comes along, you're in a position to be able to take action. Don't do it the other way around where you're running numbers and you think, oh, I'm going to buy this property. Then I have, you know, in this day and age, in the current climate, you're lucky if you can get 5 days for financing, let alone any financing at all, right?
Yeah.
Yeah.
Well, I mean, still on the multifamily side, we're seeing 15 to 20 days typically. I mean, I personally go in a cash offer because I want to buy it at the best price, and every condition costs you.
Yeah, that's a good way to look at it too, right? Is the more conditions you put in, the more you're going to pay for it. Absolutely.
Mm-hmm.
Perfect. Andrew, you got anything to add to that, or are we ready to move on?
I like what Mark said. Every condition costs you. That's true. I mean, you can't encourage people to go in firm offers. None of us can encourage that, but it does cost you. So if you have all your stuff in order, you've got, you know, you have the cash to close. If you know, I mean, the more educated you are, I think that's what it comes down to. The more educated you are on financing, on structural, like, I mean, I can go through a house and I don't worry about much, especially, you know, if my strategy is I'm going to do a renovation, there's not too much that scares me anymore versus early on it would have. So even something as simple as going with one of your investor friends to their house under renovation and seeing all the nuts and bolts of it will give you a feeling of confidence when you see other houses. Oh, I've seen that before. That's not a big deal. You don't want to be green going into, you know, the lion's den. You want to make sure that you're ready to pounce on a deal when you see it.
Absolutely.
I'll give you a perfect example is I think one of my third or fourth buildings I bought, 19 units, still own it, has my restaurant in it. We were like, there was an offer on it. It fell through during the inspection. We came in cash offer, $950,000. Somebody came in with 1.1, but had 30 days of conditions. And they went ahead and took my $950,000 offer because they're like, well, we've already had one deal fall through. We just want to get rid of this. It was a pretty bad property. So they're like, here, you take it over. Okay, thanks.
Yeah.
Last time I saw $50,000 a unit in a long time. So
absolutely. And I think that's one of the things I'd love to get some time at the end to touch on too, is I'd like to see what you guys did in terms of education, because I know there's some people out there who love, you know, the big companies for education, and there's other people who, you know, rave about, you know, get a coach or a mentor, and then other people are like, no, just, you know, do all the free stuff. So I want to make sure I've jotted a note here for us to circle back, but I think we need to keep plowing through the questions because we seem to get more as we're answering the previous ones. Sure. So Randall has said, as prices increase and cash flow gets tighter close to the GTA, what strategies and markets are you looking towards? What are you moving away from or avoiding? That's a great question, Randall. Do you want to take this one first, Andrew?
Yeah, sure. And Randall, I know we've chatted a bit, but I'll give my perspective on this. I mean, I don't like any market that doesn't cash flow. And I know that's one of the questions we were going to talk about later, Elizabeth. Like, for me, it's a no-go if I don't have cash flow, because everything, you know, you can only speculate on values. Mark and I get on the show and we pretend that we know what's going to happen. We make it very clear that we don't, but we try and make our best estimates. But when you can only speculate about value, then you have to keep with the things that you know. And cash flow today is one thing that I can know, and flexibility to lose cash flow if say market rents come down. I can focus on things that, you know, towns that I know are going to be diverse. And say if schools close in London, I know we still have a whole bunch of other things going on that are really going to help that market be lesser affected. So I would say, you know, Toronto has not worked for me in my investing career because I've looked at the numbers and the cash flow never made sense to me, and that's why I never got in. My wife did buy a condo downtown.
You were too young.
Yeah, I was too young, right? Yeah, I mean, there was a time when Toronto made sense.
Yeah, 18, 19 years ago when I bought my first property there for $280,000. I mean, the numbers were great.
Yeah. Actually, yeah, exactly. So I started in London when London was like the promised land for cash flow, and it's not anymore. So there I pivot. now let's look for other markets. Don't compromise just because the numbers don't work in your market. You have to, it's a laziness thing. It is. And I felt it too. Is like, I'm already established. I have my team. I don't want to go looking elsewhere. But sometimes we've got to pull the cord and do it.
Absolutely. That's great. Thank you, Andrew. Mark?
I would say sometimes, yeah, you got to change your strategy, right? Can you just buy something that's turnkey and it's going to cash flow? I mean, it's pretty hard in Ontario and most places right now. So, I mean, like, are you adding a unit? Like, I mean, look, Ryan Carr's on the talk today, like, and, Brady, they're adding, Ryan's like doing triplexes, right? He's building triplexes in Oshawa. I mean, they cash flow. He's changing the use from a single family to a triplex. Brady McDonald's adding, they were talking about garden suites, right? So what can you do to be creative to get highest and best use so you can get the cash flow? And that's what you're kind of looking at in most of these markets right now to be able to do that. I mean, definitely the market that I've invested most heavily in is Hamilton, and that's what we need to do. We just need to add value, whether it's just buying something and renovating it or changing the use as well.
Absolutely. And I think that's a great comment, Mark, because, if you look at buying a property, you get a single family home in the Southern Ontario, generally you're looking at least $500,000. But to add an additional unit, you might be looking at 100, maybe 150 at the most. So it makes an awful lot of sense to maximize the returns from what you currently have before you're looking to acquire additional properties. Yeah, absolutely. Perfect. Thank you. All right, so Randall, hopefully that answers your question, and you're good to go. So Paula is asking what kind of racing you do, Mark, and Ryan Carpino is asking what's your track car of choice.
So racing is it's just out at Mossport with a bunch of other rich guys, and my car is a 718 Spider, handles like you wouldn't believe, and naturally aspirated, manual transmission. I don't like all this PDK, like obviously this technology crap. So
you're an old school guy, are you, Mark?
I'm with you, Mark. I'm with you.
Yeah.
Perfect.
I have a manual as well.
So I have someone here who asked, with the process on hold for evictions, do you have tips for landlords who are thinking of using cash for keys for their tenants? What would that dialogue look like?
You want me to field this one?
That would be fantastic, Andrew.
I take a common sense approach with tenants. Like, I think that if you have to rely on the courts and landlord tenant board, I think that's kind of a little bit of a failure. It's better to try and work with them directly and reason with them. That's my biggest thing. It certainly helps if you know other people. Like one of my friends used to a bit, but he did a lot of small claims court stuff, a lot of personal injury stuff. So he talked to me about the different ways you can collect, how you can register and garnish wages and do all that stuff. So I would actually take that to tenants. I'd say, look, I get that you don't want to pay this, or you're just moving out, and you think that's something you can do. And I tell you what, I want to work with you. And if you work with me, we'll work something out. But if you don't, then I am going to, register this and garnish your wages, or I'll put it on your bank account. So if you can basically set things up like that, and you come off as, hey, I want to be reasonable, and be reasonable. That's the key. Be reasonable as a landlord. Be willing to give a little bit if it gets them to leave. And I think cash for keys could be great. You might get taken advantage of. Mark, you probably have way more you could share with this, but I just wanted to share. I think common sense is the way to go here. Reason with them. Let them see how their current course of action is just going to come back to bite them. So say, hey, I don't want that. You don't want that. Let's work together right now, and let's make something that works for both of us.
Absolutely. Yeah, I think I would agree with that. We just cleared a 12-unit building that one of our owners had purchased. So we did cash for keys, and the conversation basically went, listen, you know what, there's about to be a ton of renovations and construction here. There's going to be a lot of interruptions, banging, noise, the electricity, we're going to have to address that. There's some major plumbing issues here. We're going to have to address that. There's going to be days at a time, where from, 8 a.m. till 8 p.m. there's no water in the building. Like, we'd like to offer you some money to help you find a place where you'll be much more comfortable and you won't be interrupted. in your day-to-day living for the next 6 to 12 months. So that definitely, you know, having those major renovations planned definitely made the conversation a little bit easier, so that we were helping people and improving the quality of their life, as opposed to, you know, in any way doing something that they didn't want to do. Did you want to add anything, Mark, or should we jump on to the next question?
Jump on to the next question. You guys handle that very well. Besides, I don't actually do any of that. I have somebody who takes care of that for me. So
perfect, fantastic. Okay. So John says, thanks for sharing tonight. Wondering at what point you incorporate and start buying rentals, good grief, rentals underneath a company umbrella compared to holding personally and continuing to buy. He's currently holding 4 properties personally and 7 doors. You guys incorporated?
Yeah, I have, but I would say that this is a joint conversation between your mortgage broker and your accountant, and you can't. Yeah, and your lawyer too. You can't make these in isolation. So one thing I would recommend, and I'm not trying to plug my own stuff, but George Doobie came on my podcast and I grilled him on this, and you'll get a lot of cool answers out of that. I think it's episode 49 if you want to check out my podcast, because we dug really deep into that.
do you remember every episode? Like, do you remember like the number for every episode? Because I've seen you do that like 3 or 4 times before. I don't have any idea. Like,
well, you know, I don't have nearly as many as you do. And you know, the big thing is like the really critical ones that we covered specific topics. I've had to recommend them several times. So I'm usually like, I think it's this. I usually know within a few episode numbers.
But you are a numbers guy.
Back of the envelope usually, but yeah.
So just the whole thing with incorporating is, what's your end goal? If your end goal is to own a crap ton more properties, then you're probably going to need to incorporate at some, like if you're going to buy your first property, but you want to own 50, maybe not the first one, get a couple under your belt and then figure it out, right? But if you're at 4 now, how many are you going to want to own? If the goal is to own 50, it's really hard to do personally. And number 2, it's really hard to do personally and to be able to live your life the way you want to live it, to buy the house you want to live in personally, and buy a cottage, or, you know, a condo for your aging parents or whatever that is, because you won't get mortgages on that type of stuff because of your rental portfolio. And that's the reason why everything I have is incorporated right now. I have nothing personally other than, again, my parents' condo and my cottage. So
yeah, and we're exactly the same way. We set up our corporations 12 years ago now. And I think the other thing you have to consider is whether you want to have an active business. Like Andrew, I know you've got a construction, you do some construction things, and Mark, obviously you've got, you know, your restaurants and those kinds of things. For me, I have a property management company, I have a coaching consulting business, and then I have a rent-to-own company. So the amazing thing about corporations is that it allows you to separate things out. It allows you to take on different partners and to separate, you know, your activities in one business stream or income stream with one set of partners from all the other things you're doing. And then it allows you to separate your business activities from, you know, your personal activities and minimize liability. So there's definitely a lot of benefits to incorporating. I agree with you, Mark. It depends what your end goal is. And then it depends at what rate you want to get there. You know, if you're only going to buy 3 or 4 investment properties and pay the mortgages down to 0 and then sell them for your retirement fund, I don't know that you need to incorporate to do that. But if you're anticipating building a large portfolio, you know, doing some of your own management, your own renovations, those kinds of things, definitely incorporation makes sense. And usually the answer is the sooner the better. Yeah, perfect. All right, there you go, John. Hope we answered your question for you.
Hey, Dan, hit me up on Instagram. I'll buy your 32 unit in Fort Mac. How about that?
And Paul says, what is the best that can be done in the first 3 years on a building that has under market rents?
Kick everyone out.
Okay, so Mark is cash for keys all the way.
Well, cash for the keys is definitely, I mean, it depends. Like, how much are you bleeding cash? Like, if you can afford, like, Mark, I know you've talked about this. You had the ability to kind of let natural turnover take its, take its turn. And I think you said about 25% were just turning over anyway.
Yeah.
But if you can't handle the bleed and you're just bleeding cash, and the only way the deal works is to get them all out, well, first off, probably, consider doing that deal. Maybe that's not the one that you want to do, but otherwise I would say, yeah, just really push as much as you can, cash for keys, and hopefully you've got a buffer. If not, everybody will go.
Absolutely.
Just make sure you have enough reserve funds, right?
Yeah.
Have your full renovation costs, because once they're gone, you need to move fast, right? You don't want to be sitting on that for a vacant building for years. Actually,
one thing to add, Kyle Ford has a great strategy with this, and that's to issue the N13, which is for renovations, kicking them out for renovations, but they can come back. But then once they're on their way out, getting them to sign the form to agree that they're not going to come back, and doing a little bit of cash for keys in combination with renovation. He's talked about that. It blew my mind when he told me that. It kind of solves all the problems. I mean, again, buyer beware. Try that at your own risk. But I think that sounds like it's got some merit.
So I've never done the N13 like that, but I've insinuated that and said, listen, you're going to leave anyways. You got to. We're going to do this full renovation, blah, 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 whatever. And how about just like you did for your 12 unit? Like, I'm sure you said, hey, there's this form. I'll give you 90 days notice. You're going to have to do this, this, and this. And
yeah. We actually, that building was probably the roughest town in Kirkland Lake. So we actually gave everyone trespass letters on their way out the door with the N11s. Okay, so let's see. So Ling Ling is asking how to know which market and property fits the rent to own strategy. You want to take that one, Mark? Rent to own king over there?
Sure. I mean, so we did tenant first. We would qualify the tenant before we ever looked at a property. And back then it was a lot easier because prices were a lot less. But I think we looked basically to market in towns that we would go look up the household income, average household income, and we'd look anywhere from around 4 times that household income to the average price. And if they worked, then we knew we had a lot of candidates in that area.
Perfect. That's a great way to look at it. Absolutely. Anything you want to throw in there, Andrew? Or are you good?
He's the expert. I'd rather not.
Okay, perfect. So Patrick said, would you be able to share an experience of when you or someone you knew managed their own property that may be 3 to 4 hours away? I'm thinking of not using a property manager, but this is my first property. So using a property manager comes to mind. Still deciding and wondering if you had any tips.
So I can speak from experience here. So I'll field this one because I've been burned by doing that. Not my first property, but my third and fourth, I believe, properties were in Ohio, and I had a property manager. And I think that if you're doing it right, that could work. But to me, I have a hard time giving people my trust. I feel that they need to earn it. And so if you're far away from your property, I think you need to critically evaluate what you're willing to do to make sure it goes smoothly. And, are you willing at a drop of a hat, if things don't look like they're trending in the right direction, to drive down there? And I think that that's very critical when it's your first, that you be willing to overcompensate for your uncertainty. And you have to be ready to work really hard to get in motion. And then that law of inertia, like when an object in motion tends to stay in motion, I think that you really need to work hard to get in motion is what I mean there. That would be my 2 cents, because I lost a lot of money in Ohio, at least a lot of money for the time. It was borrowed money that I borrowed on a line of credit. And I still make payments on that actually to this day. So you know what? It's not worth being cavalier about it. I think that it's worth overcompensating. Set some budget of time and budget of money allocated to traveling to your property until you feel like you've got your feet under you.
I would agree with that. And one of the things, the common mistakes I think a lot of investors make starting out is that they fail to look at the Residential Tenancy Act for the province in which they're potentially investing in. So whether you're choosing Ontario or BC or out in the Maritimes, as so many people are right now, make sure you give a really good read to the Residential Tenancy Act and then go back and read it again, because these are the rules that are going to govern your business. These are the rules that are going to be telling you, how to do things. It amazes me how many people there are posting in landlord groups who don't understand what the requirements are. And this is one of the advantages to hiring a property manager, is that They do know the ins and outs of the Residential Tenancy Act. They do know how to handle, if someone's not paying rent, if somebody's, being disruptive or disrespectful to other people in the building, they know how to manage all of that. So there's definitely some advantages to hiring a property manager. There's some disadvantages as well. So a lot of it, and again, a smaller building, up to a triplex, it might not make sense to hire a property manager. The financials of the building might not be able to withstand it. So you got to do your numbers, and you've got to make sure you know what you're getting yourself into for sure. Mark, this next question is definitely for you. One major question is how long to hold a property, since currently it's a seller's market. The price is high and I had bought the house 10 years ago, all tenanted with positive cash flow. Should I sell or?
Yeah, so that is the question, to sell or not to sell.
Yes.
Right? Whether there's no, sorry, that's a different one. No soliloquies today. To sell. So again, I'm a return on equity type of guy. So I'm looking at the equity sitting in that property and saying, if I took out that equity minus the 25% I have to pay in capital gains tax, what could I do with it? Could I go make a higher return? And if the answer is yes, because you're a seasoned investor that can do a Burr or can take it to a different area, or can take that one house and turn it into, or that one unit and turn it into 5 units, then then the answer is definitely sell. If the answer is I have no idea what to do with the money and it would just go sit in a bank account because I think the market is overheated, then the answer is not to sell. Because the best time to buy a property was 50 years ago, the second best time is today. So don't sell unless you have a purpose for that money, and you can go ahead and make a higher return than you would if you own that property. Or again, like Andrew or myself, you're diversifying, but again, we're still taking that money somewhere else to get a greater return on our money than we have it here, because we're both return on equity type of guys.
Yeah. I think the other thing that we sort of fail to consider sometimes as investors is when the joint venture partnership isn't going well. There are times.
That's why I'm selling. Not that it's not going well. It's just he's done, and that's fine. So.
Yeah, but there are times where, and I've seen it. I know I'm not the only one who's had this challenge where you have a partner and you start and everything's great, and then 5 years later, you guys are moving in different directions. You've got different things going on. Maybe they're getting divorced or whatever else is going on. And, the communication breaks down and the partners can't agree on anything anymore. And at that point, either one partner buys the other partner out, or you just go, you know what, enough is enough, and you sell and you move on.
Yeah.
I don't think there's anything. I think we make a lot of mistakes as real estate investors, assuming that the number of doors is the most important thing, and it's not. It's the quality of the income or the quality of those doors. Having 400 doors, having 1,000 doors, that doesn't mean anything if you're negative cash flowing on every single one of them. So you want to make sure you're buying the right property to add to your portfolio, not just any property.
Yeah.
Okay, awesome. Thank you. These next two are going to be definitely for you, Andrew. We've got Braxton's asking if you can explain the Burr strategy. And then Nav is saying, I struggle with the Burr. I'm in the GTA and struggle to find renovators and have a team. Not sure what the question is. Perhaps just share your thoughts on that, whether that's
Sure.
a common challenge.
All right. Yeah. So Burr, for anybody not familiar with that, has gone by many names, but buy, rent, refinance, buy, renovate, rent, refinance, repeat. It's basically just a way of saying kind of flip to yourself. So rather, do everything you do in a flip, except don't sell it, refinance it at the end and try and get your money back out of it that way. And the idea, and that is really how I built wealth for myself. It was all learn how to renovate, go find deals, just market deals, renovate them really well at an affordable price, and then go back and refinance. And that was really big for me. How I was able to find those contractors was basically doing that, which most people would not be willing to do. I learned a very difficult way. Slept in my houses, hired people off of Kijiji, Craigslist for people out west. And I just did basically whatever it took to find good people. I fired probably, 20 people for every one that I kept around. And, that's because I was just fishing in a pool of not great quality the way I was doing things, but I learned, and through that, I kind of got better and better. So to answer your question, if you're struggling in the GTA, it comes down to how much time you have. Like if you don't have time, you're probably just going to end up paying somebody who's very, very reputable, but their price tag's going to be higher. Or, if you've got the time, you can go out and you can find the individual trades. I eventually started my own construction company, got my own employees, my own site super, and I was able to drive my costs down into the ground to renovate. And I think that it's really a question of, how much time you have available, or if you can hire a team around you to help you with that.
Absolutely. Absolutely. Thank you. Jonathan was asking, how do you diversify the way you acquire property with other forms, or do you diversify the way you acquire property with other forms of creative financing? Thoughts, Mark? You're on mute.
There we go. Definitely yes. Again, if you've watched my channel, or maybe I said it with Mandy, I don't remember where it was, but I find that joint venture partnerships are the most expensive money that you can get because you're giving up so much equity. So if I can borrow private money on things because I know I can borrow property quickly and get my money out, and I can hold the property 100% and refinance it after, then it's way cheaper to do that than to bring in a partner. Lately, I've been doing partnerships where I give an 8% preferred return, and I give out 25% of the equity ongoing. So I keep more of the property, but I pay a little bit higher rate to get in, but I can turn that property, so I pay that 8% on, refinance, but I get more of the property ongoing. So I have more control.
Yeah, and that's one of the things that you never want to get yourself into a situation, right, where you have given up control over the property and you no longer have a say in how things are being done. Absolutely. Yeah, for sure. Thank you. Chris says, thank you for doing this tonight. I'm learning a lot from your podcast. So that must be you, Andrew. And now diving into the YouTube videos. There you go, Mark. For commercial lending on a multi-unit, is it possible to get a first mortgage with a bank and a second with a B lender? What DCR do they look for? What else are they going to look at that I can evaluate and prepare for?
So DCR on first is going to be around 1.2, I think.
1.2.
Yeah, to my knowledge, there's no way that you get a first with a bank and a second with a B lender. B lenders lower loan to value.
So slow your roll there.
Okay, sorry.
We're all going to chime in on this one.
Yeah, so here's the thing. You can do it. It's just you're complicating matters more, and you can put your first mortgage on, and the day later you can register your second mortgage. So it just depends. Like, I own a property that has 50% loan to value. I want to renovate, so I bring in some secondary money. Like later on down the road, I can definitely do that, right? The first mortgage company doesn't really care when I refinance and they pay out that second. They've never really done anything, although in their paperwork it says that I can't do it. When you get into trouble is when you try to close on that property with secondary financing, because that's when the lawyer who is representing the bank as well as you, then they're like, well, no, this doesn't work, because they got to follow the rules. The bank doesn't care as long as you make your payments, yet when the lawyers get involved, we got to follow all the rules. So when you're closing on a property, then you can't register that the same day. So you either have to have equity in other properties, and then put it on that property and then move it over the next day, or put it on another property.
Absolutely. Now, have you been able to do that with a B lender though? I've done it numerous times, but always with private money. I've never seen a B lender who would go on title in second position behind an A lender.
That's going to be a private for sure.
I just assumed they were talking about private.
Yeah.
He's talking about a B lender.
No, you're not going to get a home trust in there lending a second. They won't. They all want to be in first position.
You might get a credit union.
You know what? The only
construction loan or something like that. Like
okay. So that in that circumstance, maybe
a line of credit.
Yeah.
Yeah. That's more A lenders though that'll do that, and that's
now.
less common these days now than ever, and probably not very common with commercial like he's talking about.
Yeah, absolutely.
Which getting construction and stuff, or
yeah, once you get into construction, the rules are a bit different. I try to avoid that though. Like if I'm constructing, my goal is I'll take a private first mortgage and just hold cash to do my renos. I do not want to deal with the construction lien holdbacks and all that stuff. Like I will if I have to, but I really want to deal with just
you
cash.
You gotta check out credit unions. Libro, Meridian, they're beautiful for that.
Give them a try.
Yeah, they're super easy.
All right. Yeah, I haven't ventured there.
Like 3 buildings. Yep.
Cash in my hand is just so easy. I don't think anything's easier than that.
Oh, there's nothing easier than that.
All right, so we're moving on to, is it Deshaun? What are your thoughts on investing in multi-unit buildings at market value, but with the potential of creating 2 to 3 units, all legally zoned? Found a legal 6-plex with the possibility to renovate and get 2 to 3 more units. Cap rates are, as is, are 9.8 with high cash flow. Risks include 1 to 2, maybe 3 major employers, very little data on vacancies and market cap rates. That sounds a lot like my market, actually. My worry is if I was to add 3 units, the ARV might not be high enough to benefit from recouping reno costs and down payment. Currently, I'm awaiting to hear back from an appraiser for the market cap rate to help me understand future ARV. What are your thoughts on high cash flow, yet low population and 1 to 2 major employers? I think that one might be for me. That basically sounded like it was custom made. So my thoughts are, for those of you who don't know me, I'm an investor and property manager in Kirkland Lake, Ontario. So our population here is, depending on who you talk to, between 8,000 and 10,000. And I am specifically here because I love being, the larger fish in the smaller pond, where there aren't a lot of wholesalers up here, because a lot of people will just come into the office and kind of put their keys on the desk and say, I'm done, like, buy my building, please. So there's definitely some benefits to, being the larger fish in the smaller pond. We're here because the cash flow, as far as we're concerned, cash flow is king. So we definitely have, in fact, I have a building very similar to this, a 6-unit building, where if someone wanted, they could renovate it and turn it into an 8-unit. There is some risk associated with being in the smaller markets, but the risk really comes if you want to sell. And I think there's a lot of people who think that the Burr strategy must give you all of your money back out. And the reality is that's not going to happen on every deal. That would be what I class as a home run out of the park. So that's where, you buy the property, you put in the construction costs, you rent the building, and then you get it appraised and you get every dollar back out that you put in. Mark, Andrew, weigh in here, guys. How many times have you done that on your buildings versus the number of times that you leave a little bit in?
Okay, so for me, I've only ever gotten like every dollar out, probably like twice, roughly between like 2 deals. Those were kind of like my home run. And then otherwise it varies how much money's being left in. Could be 20,000 on one. The property ended up being worth like $1 million when I was done, but no bank's going to give me anywhere near that. So I actually had, I had a lot of forced equity in there, and then I had a bit of my own money, probably about $120,000 of my own money left.
Perfect. That's fantastic. I assume, is that you using the answer live there with the questionnaire, the question counting down, or the clock counting down?
Oh, sorry. Is that my video saying that? No, just let me fix that. I think we're about to lose it. Timer.
That was awesome.
That's his camera. Nice.
Yeah.
So I've actually 9 out of 10 of my Burrs I've got in full cash out refinance on buildings, on everything. So
30-minute timers.
I think too, there's a lot of people who are comparing, they see deals that are posted on Facebook, and they see people talking about, what their lives are looking like, and they're trying to make every deal that they do look like these out of the park home runs that people are posting. And I think we have to realize that a lot of times what we see on Facebook, the shiny, pretty lifestyles and the cars and all the fun stuff, that's really not reflective of the lives that people are living a lot of times. And in my world anyways, with a lot of the investors that I work with and that I coach, Not every deal is an out of the park home run. That does not mean that you shouldn't do the deal if you can't get every dollar back out, because if you get every dollar back out in 3 years or in 5 years, as long as it's been providing cash flow, that's the most important part.
Yeah, my goal is to get the renovation costs out at the original refinance.
So that's in your down payment then?
Yeah.
Absolutely. So okay. Perfect. All right. That was awesome.
And yet that's a single for me, and then a double is some, and then
we got to keep the context in here. Like there are, like it all comes down to, again, how much time you have. Like if you have all the time in the world, you create an elaborate wholesaling strategy where you're buying significantly under market. You start your own construction company so that you can renovate cheaper than everybody else, and you control your process, and you can do perfect burrs. You have the ability to control these things, but time will always be the factor. Time and money are the two big factors there. So some people with less time and more money, they sink bigger down payments in it, and it's okay. If you're like me, when I was starting, I had no money to leave in any deal. The only way I was growing is if I was getting it pretty well all back out. And down the road, as you get some natural appreciation, then you get some more flexibility in that regard.
Absolutely. Okay, Mark, Nav has asked 2 more questions, which are actually one for you and one for Andrew. So 30 seconds here. Mark, how did you get into options trading properly? I heard you mention on your channel that you are making 3 to 4% a month. I know this is real estate focused, but if you could take 15 seconds, so you don't have 30, you now have 15 seconds to answer,
sure.
Mark.
So I read Lee Lowell, Get Rich with Options, and I read Derek Foster, Money for Nothing and Stocks for Free. And then I found a community of people who were trading options, and I learned from them. And on the VA side, I've actually hired people in the Philippines. I've had people in the US. I've had people all over Canada as a VA as well. And there are companies out there that will do those for you as well. There's Canadian companies, US companies that will hire those people. So yeah, I had somebody in India at one time as well. So there are people all over that will do that for you. But go ahead.
No, that's perfect. Andrew, I don't know how you would weigh in on how to find a VA, but have you given any?
I would just look on Indeed. I mean, I'm kind of going through that. I've been talking to those guys about it, and I don't know if that you can find. There are actual sites for like Filipino. I have had VAs from the Philippines, but not anytime recently.
Yeah, and my sort of thought with hiring someone local is, especially in light of the pandemic right now, I really wanted to support somebody who was local and help someone out who had been going through a tough time. And I find that my level of trust, I think, is a little bit higher knowing her and, knowing that my mom knows her from church. So that I think that was just kind of the universe giving me a gift, more than anything, more than, doing any sort of diligent, screening or anything else. It was just someone I knew I could trust, which made a big difference for me. Okay, great question here. If you knew the pandemic and lockdowns were coming beforehand, would you have done anything differently? If so, what?
So I think I already touched on this. Like I would have been a little bit more diversified out of student rentals, which I'm just correcting that now. I mean, it's really good time to sell them. I mean, the market for them is fantastic. So it's not like I'm at a loss there, but I don't like selling properties. People who follow me know I'm not a fan of selling. And if I am going to, I want to get that money working right away.
Absolutely. Perfect. Okay. We still have a ton of questions and we are running out of time. So if you guys don't mind, let's circle back and I'm going to identify one of the questions that I sent you. But until we do that, why don't you tell us a little bit about how you educated yourself?
Okay, I'll start. Mark, you can go second. I had a good mentor. So Carmen, my mother-in-law now, at the time was my girlfriend's mom, and just offered that I could basically work for her in a commission role as a mortgage agent. So I got my license, worked under her. She's a super savvy investor, has done so many deals. She's got thousands of units in either ownership or in development. through various different ownership structures now. At the time, she was just a really established investor. So I started learning from her. And then another mentor of mine who's been on my podcast a couple of times, Carlos Sorrenti, was a guy that I just started talking to. We both graduated from the same school and met each other afterwards. And he was kind enough to answer questions when I had them. I would, text him, email him, call him, and he would help me. So I kind of just started mimicking what he was doing. And that was how I got the ball rolling.
Awesome. That's fantastic. So you sort of combined a little bit of, mentoring and kind of learning as you went along, hands-on, boots on the ground kind of thing.
Yeah. Like I read books and, I didn't pay for any of those courses, but, I would read books and, I have paid for coaching now, but it was just latch on to different ideas from different people. That's why I started my meetup group. I would have, we'd have like 100 people come out in 1 month, just sharing ideas with fellow investors now is to me the absolute best way to learn.
Yeah, I would agree with that. How about you, Mark? How did you educate yourself and become the titan that you are of real estate?
Yeah, well, so I started reading Rich Dad Poor Dad and doing that type of stuff. I started going to the free events that were Mark and Carol Garrett used to hold cash flow games all around Toronto. So I used to go, once, twice a week, play with them. Darren Weeks was bringing in stuff with Rich Dad Poor Dad, and then I got introduced to other organizations, RAIN, that type of thing. Like, again, I've never paid for that big package. I've never gone and paid $20,000 for like the Key Spire or whatever that is. I've just, again, the same as Andrew, I found people who were successful, and I didn't waste their time. Like I gave them value, they gave me value, and I still can call some of those people up today and they own thousands of doors and say, hey, I'm thinking about doing this. What are your thoughts? And they've gone through it before, they know it, and they call me for things too. But they're like, hey, you're doing this. What help us over here, right? So it's a give and take relationship, and yeah, that's how it works.
Awesome, appreciate that. Given that we still have about 20 questions here that people would love to have answers on. So clearly, unfortunately, we're going to run out of time.
Well, why don't we send them over to the Canadian Mastermind, and then we can go there after and answer them on Facebook.
Oh, that's a great idea. I love that. That's a fantastic idea. So you're suggesting then that people take their question and put it into the mastermind?
Yeah.
Perfect. That would definitely work. I love that idea. My thought was maybe we better just do this again next month.
You're still on mute, Andrew.
I think
I was just gonna say we could do that too.
We could do that too, yeah.
Just like, I'm busy. I got things to do. I got places to be.
I'm typing an answer here. I'm tackling the ones that don't seem like they need a discussion.
Okay, that's awesome. Appreciate that, Andrew. All right, so what I'd like to do then is sort of round out the evening with asking you guys what you think is going to happen, because I know it's the question that you guys get asked a ton. It's the question that I get asked a lot too, which is, what do you foresee happening in the real estate market for the balance of the year?
You can go and see Andrew and I's live Facebook that we did, or live YouTube that we did a couple weeks ago. I honestly don't think without government intervention that this market's going to cool at any time. There's so much demand. I was talking about it today for my video on Wednesday that, a $2,500 mortgage payment at 6% interest is like a $400,000 home. At 1.5%, it's like a $700,000 home. So they're still affordable. People are still able to buy them. So, and that's really what's driving this. Full-time employment's really close to where we were at the beginning of the pandemic. I kind of don't see anything changing here. I don't think we're going to be 20-something% like last year yet. Who knows? I've been wrong before.
Well, that's it. And when CMHC is making huge mistakes in their predictions, that, the market is not doing what you would anticipate it doing, because CMHC. Listen.
I used to have the head economist for Hamilton come every year and speak at my group when we used to have live meetings, and he was always wrong. The only thing he ever got right was his population increased numbers and his number of transactions. He called those and he nailed those, but they were always super conservative on price.
Wow. So that's kind of like the weatherman then. Andrew, I hope you're an accurate economist.
No one is.
No, that's the thing. It's a social science, right? That's why I love economics.
Here's the thing. I don't try and predict as much as I try and question the things that go into it, just so we can make better decisions. So Mark and I will often talk, what's driving this? Why is this happening? You look at the ingredients that go in and you try and do your best, but at the end of the day, we just don't know. Like, to me, I could very easily see us having another 17% across the country increase in prices. That's very possible. Windsor was up. We looked it up like 35% year over year. 32, and now we looked it up. Toronto's starting to boom. So I think it comes to a plateau. Like, of course, you've got foreign buyers that aren't affected by, mortgage rules. They're coming in with cash. Those people are going to be able to buy these cities up, even when they get really expensive. For the average Canadian, those people they have an affordability threshold, and then at that point they sprawl out. So I think that we're going to see more sprawl to smaller towns. I always talk about this, so go back and watch all of our videos if you want to know what Mark and I think about this. We're not saying we're right, but really, really important to understand the fundamentals and the ingredients that go into it.
Absolutely. And that's honestly, Andrew, one of the reasons I love listening to you, because you do a really good job of just taking some of the more complex thoughts and concepts and breaking them down in a way that's easy to understand. And I really appreciate that very much.
Thank you.
Fantastic. So my apologies, guys, that we're not going to get a chance to finish with everyone's question. But definitely I'll talk to the guys, and it looks like there's already people messaging me saying they'd love us to do this again next month. So
you might have to buy the bigger Zoom package.
Yeah. Well, it would certainly be easier if everybody was asking questions in the same space. Trying to balance Facebook with Zoom is always an interesting endeavor. I think so. What I'd like to do, I'm going to post oh, you guys are awesome. I'm going to post our contact information. So if you guys don't mind, here's our contact information so you can find us. Mark, I originally had your contact information, your email address, but given that you said you don't like emails, I omitted it. And people can only find you on Facebook now.
Instagram's I don't like Facebook Messenger either. Instagram's the way to go.
Isn't it funny? Everybody has their own preference, eh?
Yeah, Instagram's the way to go for me too.
Instagram and YouTube. That's where I hang out.
So what I'd like to do, so the gift I have for joining us this evening, for one person who is still here, is called the Action Takers Real Estate Investing Planner. My friend Quentin D'Souza wrote another book. He's quite prolific, and I'm really excited. I haven't had a chance to read through this yet, but I'm waiting for my copy to arrive. So Nav, you had some fantastic questions this evening, and if you can do me a favor and reach out to me on Facebook, because unlike these guys, I actually like Facebook a lot. So find me on Facebook, send me a private message, and we'll get your contact information and get the book sent out to you as soon as possible. Mark, you had mentioned you are willing to throw in one of your books. Which book would you like to throw in?
Fix and Flip. Fix and Flip,
fantastic. Is there somebody in particular who asked a question tonight that you thought was great, or somebody who you would like to share it with, or do you want to give?
I will definitely let you have that prerogative.
Okay.
I thought anonymous attendee deserved.
Yeah, that was a great one. Yeah.
In that case, then who gets the book? Oh, Paul said he already has the book. It's a great book. Tell you what, give me a number and registered number, whatever that is. We'll get that book, and we'll find out. We'll reach out to them.
82.
82. Perfect. So my fantastic VA, Mary Beth, will go in tomorrow.
Apparently it's Vishal.
Vishal. Oh.
They were putting their numbers in. So
yeah, absolutely. So my VA will go in and check and see who registered number 82 was, and then we'll reach out to you and make arrangements to send a copy of your book. You guys, this has been a ton of fun. I really enjoyed it. I love the different perspectives. Anything else you want to add? Any closing thoughts you think would be really helpful for new and veteran investors alike right now?
Get out there and run the numbers.
Yeah.
Definitely run lots of numbers. You know, if you're on a mission to buy, yeah, you should be running numbers in your market every single day. Like that's kind of like after work. You know, you go sit down maybe with a beer and have your Excel sheet out. That was my Sunday. I was just crunching deal after deal after deal and seeing what works in what areas.
Mm-hmm.
Yep.
You know, I did an interesting exercise with one of my coaching clients a couple of weeks ago. And what he did was he actually took the solds, because they're in the smaller markets, they're really struggling for comparables to be able to say, you know, a triplex is worth this, or a duplex is worth this, a fourplex is worth this. So he actually keeps his own spreadsheet now of all the properties as they sell, so he can get a really good idea, a ballpark idea of what those properties are worth based on, you know, condition and everything else. So he has a really good idea of what number he can go in at to stay strong and be able to make his deals work. And I love that he is willing to take the time and put that into creating a spreadsheet like that, because it's such a fantastic tool and nobody's going to do it for you.
Yeah.
Great point.
Awesome. Thank you so much, guys. Thank you to everyone who attended. This was a absolutely huge success, and we definitely wouldn't be here without you guys and your interest in this. So stay tuned. I will talk to Mark and Andrew offline, and hopefully we can bring you another one next month and do a little more of the Q&A. Next time, I'm not even going to bother preparing any questions. We're just going to do a free-for-all. How's that?
Hopefully we can
Sounds
save
good.
these questions. Maybe we can start with those.
Yeah, there should be I would imagine Zoom will save all these for me in terms of as a printout I can grab afterwards.
Perfect.
Awesome, guys. Have a fantastic
All right.
evening. Happy investing. We'll see you guys all again soon. Take care.
Thanks, everyone.
Good night.
Good night.